Gross national product, GNP, is a fundamental economic indicator that provides insights into a country's economic performance. It measures the total value of all goods and services produced by a country's residents, regardless of their location. In this video, we will take a deep dive into the intricacies of GNP, including its calculation methods and components, and how it compares to gross domestic product, GDP. We will also explore the various uses and applications of GNP, its advantages and disadvantages, historical perspective, and global trends. By the end of this video, you will have a comprehensive understanding of GNP and its significance in the world of economics. So sit back, relax, and let's explore the world of GNP together. What is GNP? GNP is a critical economic indicator that is used to measure a country's economic performance and its citizens' economic activity. It is an essential tool for policymakers, economists, and investors to gauge a country's economic health and compare it with other countries. GNP is calculated using either the income approach or the expenditure approach, which takes into account the economic activity of a country's citizens, whether they are living within the country's borders or abroad. This makes it a more comprehensive measure of a country's economic output than other indicators like gross domestic product, GDP. By measuring the economic activity of a country's citizens, GNP provides a more accurate picture of a country's economic performance, particularly in cases where a significant portion of a country's population lives abroad. This is because GNP includes the income earned by a country's citizens from their work abroad, which is not included in GDP. Therefore, GNP is a more accurate measure of a country's economic performance, especially for countries with a large number of citizens working abroad. Calculation methods. The income approach and the expenditure approach are both important methods used to calculate GNP, and each has its advantages and disadvantages. The income approach provides a more accurate measure of a country's economic activity by taking into account the income earned by a country's citizens from their work abroad, which is not included in GDP. This method is particularly useful for countries with a large number of citizens working abroad, as it provides a more comprehensive measure of their economic activity. On the other hand, the expenditure approach provides a more comprehensive measure of a country's economic activity by taking into account the spending of a country's citizens, regardless of where they are located. This method is useful for measuring the impact of international trade and investment on a country's economy. However, it may not accurately reflect the economic activity of a country's citizens if they are not the ones doing the spending. Therefore, economists often use a combination of the two methods to get a more accurate picture of a country's economic performance. By using both the income and expenditure approaches, economists can gain a more comprehensive understanding of a country's economic activity and make more informed decisions about economic policy. Components comparison with GDP. It is important to note that while GDP and GNP are both measures of economic output, they have different implications for a country's economic performance. GDP is often used as a measure of a country's economic growth and productivity, as it reflects the value of all goods and services produced within a country's borders. However, it does not take into account the economic activity of a country's citizens who may be living and working abroad. This can be a significant limitation, particularly for countries with large populations living abroad, as their economic activity may not be reflected in the country's GDP. On the other hand, GNP provides a more comprehensive measure of a country's economic output, as it includes the economic activity of a country's citizens, regardless of where they are located. This means that GNP can be a more accurate measure of a country's economic performance, particularly in cases where a significant portion of a country's population lives abroad. By including the income earned by a country's citizens from their work abroad, GNP provides a more complete picture of a country's economic activity and can be a more useful tool for policymakers and economists. Uses and applications. GNP is a crucial tool for policymakers, economists, and investors to assess a country's economic health and make informed decisions about economic policies. It is used to compare the economic performance of different countries, particularly in cases where a significant portion of a country's population lives abroad. GNP is also used to measure the impact of international trade and investment on a country's economy, making it an essential tool for policymakers and investors looking to make informed decisions about international trade and investment. By providing a more comprehensive measure of a country's economic output, GNP can help policymakers and investors identify areas of strength and weakness in a country's economy and make informed decisions about economic policy. This can include decisions about taxation, government spending, and international trade agreements. Advantages and disadvantages. Another advantage of using GNP is that it provides a more comprehensive measure of a country's economic output, as it includes the income earned by a country's citizens from their work abroad. This can be particularly important for countries with a large number of citizens working abroad, as their economic activity may not be reflected in other economic indicators like GDP. However, GNP can also have some disadvantages, such as being skewed by the presence of multinational corporations within a country's borders. If these corporations are earning a significant amount of income within the country, but are not owned by citizens of that country, it can inflate the country's GNP in a way that does not accurately reflect the economic activity of its citizens. Historical perspective. The development of new economic indicators that take into account the environmental impact of economic activity has gained momentum in recent years. As concerns about climate change and environmental degradation continue to grow, many economists and policymakers have called for the adoption of new measures that provide a more comprehensive assessment of economic activity. The Genuine Progress Indicator (GPI) and the ecological footprint are two such measures that attempt to account for the environmental impact of economic activity. The GPI takes into account factors such as income distribution, natural resource depletion, and pollution, while the ecological footprint measures the amount of land and water required to sustain a country's economic activity. Global trends. Despite the decline in its use, GNP remains a valuable tool for assessing a country's economic performance, particularly in cases where a significant portion of a country's population lives and works abroad. In some countries, GNP is used in conjunction with GDP to provide a more complete picture of the country's economic performance. For example, in the United States, GNP is still used by some economists and policymakers to assess the economic activity of American citizens living abroad, as well as to compare the economic performance of the U.S. with other countries. In other countries, such as India and Pakistan, GNP is used as the primary measure of economic output, particularly in countries where multinational corporations play a minimal role in the economy. Despite the rise of other economic indicators like GDP and the Human Development Index (HEI), GNP remains an important tool for assessing a country's economic performance and making informed decisions about economic policy. Its continued use in some countries and by some economists and policymakers is a testament to its enduring relevance and importance in the world of economics. In conclusion, GNP is a measure of the economic output of a country, based on the economic activity of its citizens, whether they are living within the country or abroad. If you have any questions or comments, please leave them in the comments section below. And don't forget to like and subscribe for more videos on economics and finance. Thank you for watching.